One of the most confusing moments in trading is when you're finally doing well, and then everything starts falling apart. The strategy hasn't changed, the market doesn't seem much different, but suddenly the profits disappear, the confidence fades, and every trade feels harder than it used to. So what happened? Today, we're uncovering why good traders suddenly start losing and why the answer has almost nothing to do with the charts. The most dangerous phase. Most beginners expect to struggle, but almost nobody expects success to become a problem. Ironically, the most dangerous phase in a trader's journey often begins after they start winning, because winning changes how you think. And if you're not careful, it changes how you behave. That's when the real danger begins. The confidence trap. Confidence is essential in trading. Without it, you'll hesitate. You'll skip good setups. You'll doubt every decision. But confidence has a hidden twin: overconfidence. At first, the difference is almost invisible. You win a few trades, then you think, maybe I figured this out. Maybe I can risk a little more. Maybe I don't need to follow every rule. And that's where the slide begins. Small changes, big consequences. The decline rarely starts with one huge mistake. It starts with tiny compromises. You enter just a little early, you hold a little longer, you move one stop loss, you increase position size slightly. Each decision feels harmless, each one feels justified, but together, they slowly pull you away from the discipline that created your success in the first place. Success changes your mindset. Success can quietly change your expectations. You begin expecting every week to be profitable, every setup to work, every month to beat the last. Then the market changes, a losing streak arrives, something completely normal. But now it feels abnormal, because your expectations have changed. Instead of accepting losses, you start resisting them, and resistance leads to emotional decisions. The invisible ego. This is where ego quietly enters, not in an obvious way, in a subtle way. You stop asking, did I follow my plan? And start asking, why isn't the market rewarding me? That shift is dangerous, because now your identity becomes attached to your results. Legendary trader Jesse Livermore understood this lesson repeatedly. He knew the market owed him nothing. Every trade had to earn its place. Every day required humility. The loss of discipline. Here's what usually happens next. You stop respecting your own process. The trading journal gets ignored. Risk management becomes flexible. Patience disappears. You begin looking for excitement instead of quality. Ironically, the habits that made you profitable slowly disappear, not because you forgot them, because success made them feel less important. The psychological reset. Professional traders understand something many never do. Winning doesn't make you immune to mistakes, it simply gives you new ones. That's why experienced traders constantly reset themselves. They review trades, reduce risk during difficult periods, question their execution, not their ego. As trading psychology expert Mark Douglas emphasized, the market doesn't care about your previous wins. Every trade is independent. Every decision requires the same discipline. How to break the cycle. If you've gone from winning to losing, don't immediately blame the strategy. Instead, ask yourself, am I following the same rules? Has my risk increased? Am I forcing trades? Am I trading to make money or to prove I'm still good? Those questions reveal far more than another indicator ever will, because your habits often change long before your results do. The mindset of long-term winners. Long-term profitable traders treat every trade with respect, not fear, respect. They know confidence should come from discipline, not recent profits, because profits can disappear. Discipline stays. That's the foundation. Not excitement, not prediction, not ego. Consistency. Closing. Why do good traders suddenly start losing? Not because they forgot how to trade, because they slowly stopped doing the things that made them successful. They became comfortable, less disciplined, more emotional. And the market noticed. If there's one lesson to remember, it's this: success doesn't protect you from failure. Only discipline does. Subscribe to Mind Over Markets, because the market isn't testing how smart you are. It's testing whether you can stay disciplined even after you've started winning.